Hello and welcome to Follow the Money. I'm Robert San. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today on Follow the Money, we're taking a hard look at how Filipinos think about money. In a time of sky-high interest rates, flat wages, and global uncertainty, are we playing smart or just surviving? From real estate to risky investments, side hustles to saving strategies, we're asking, what does true financial security look like in 2025? And are most Filipinos missing the mark? And joining us today is Alexandra Yatco, equity analyst at Regina Capital Development Corporation. Alexandra tracks market trends and investor sentiment every day, and she's here to help us make sense of where to put our money and why. Good afternoon, Alexandra, and welcome to Follow the Money.
Good afternoon. Thank you for
Alexandra, so let's start with this. What's the biggest misconception about money do you hear in the Philippines today, and how do we start unlearning it?
I think that the biggest misconception really is that saving money alone is enough to build wealth, because we're taught that we need to ipon our savings in order to keep our cash safe. However, in this high inflation environment, we need to focus on growing our savings, and we need to understand aspects of financial literacy and risk management as well in order to continuously grow our savings and earnings.
Do you think there's enough awareness right now in terms of financial literacy that newbie investors or those who want to earn more with their money today, is there enough education and awareness on that?
I think there's still a significant gap in terms of the education of financial literacy. There are still quite a few aspects that need to be covered in several education sectors in order for people to be more aware of aspects such as compound interest and asset allocation and liabilities as well.
Now, Alexandra, are we in the middle of a quiet financial storm, or are Filipinos just getting numb to economic warning signs?
I think right now we could see that there are several difficult aspects. We see rising household debt, we see inflationary pressures, and we see slow wage growth. But we also see short-term consumer optimism. Right now, what we really need to focus on is when we focus on awareness of our financial trajectory and also accompany it with certain acts as well, so that we do not stand idly by.
Mm-hmm. Now, we keep hearing buy the dip. What does this mean, and how do we know if it's a dip or a full-on downturn in disguise?
In terms of buying on a dip, it usually assumes that recovery is near. However, not all market declines can be short-term corrections. If we focus on things like a dip, it can be quite temporary, but a downturn reflects further issues such as deteriorating earnings, credit tightening, or even macroeconomic shocks. So in order to tell the difference, we really need to look at price charts and fundamentals such as GDP trends and earnings report, and also liquidity conditions.
If we're to look at the foreign investors, where are they placing their bets today, and why should ordinary Filipino investors pay attention?
Right now, I think several foreign investors are currently eyeing sectors related to infrastructure, energy transition, logistics, and several digital platforms as well. So they focus on areas with favorable demographics and long-term growth potential. I think it's important to be able to monitor these trends because we see, as a result, broader trends as well in pricing, liquidity, and economic activity.
Now, looking at our local economy, we're seeing interest rates going up, prices are up, wages are flat. What cycle are we in today, and where does it end?
Right now, I think we are in a phase where central banks have started to tighten aggressively in order to curb inflation, but we're still seeing a slowdown in terms of labor market and the consumer sentiment. If we focus on high borrowing costs, this could weigh upon households and on inflation as well. So we need to focus on sustainable inflation and stabilizing interest rates as well as real incomes.
And if we look at investments in real estate, we see that Filipinos do love to invest in real estate. But is it still the safest bet today, or are we entering an overvalued, over-leveraged market?
I think people have generally turned towards real estate as a reliable and stable source of value in the Philippines. However, in the early months of the year, we were able to see that there was quite an overwhelming oversupply of condominiums in the property market, especially in Metro Manila. We were able to see prices outpacing income growth in key urban areas, with pre selling units increasingly dependent upon leverage and speculative buying. However, we were able to see at the end of the first and second quarters that there's been early recovery trends, especially in terms of the selling of RFOs and as well as in the provincial demand for these units as well. So we can see that we have to be more diligent and understanding the property sector.
Now, if we look at the real estate investment trusts, is that also a viable investment today?
It could be a viable investment as well, as people constantly turn to property names such as REITs in order to pursue stable dividend payouts as well.
Now, if we go back to basics, Alexandra, for those who are new to investing, those who want to increase their wealth, if I had 100,000 pesos today, where can I put it that gives me peace of mind and real growth?
In order to do that, a certain portion may be allotted for low-cost index funds or well-known index names that pay out regular or stable dividend yields. And another portion would also be allotted in government retail treasury bonds for modest but consistent growth as well. And a portion can also be done through time deposits or through ETFs, as this would provide a certain level of peace of mind.
Okay, Alexandra, it's still much to discuss, but we're just getting warmed up. Follow the Money returns after a short break. You're still watching Follow the Money. Still with us is Alexandra Yatco, equity analyst at Regina Capital Development Corporation, as we continue our deep dive into how Filipinos can make smarter money decisions amid today's uncertain economy. Now, Alexandra, let's start with this now. What financial blind spot do you think most Filipinos have right now, and what's the price they might pay for ignoring it?
I think that right now it's easy to underestimate the long-term cost of inflation and focus more on short-term income sources such as remittances. However, without investments, even consistent earners may really face certain challenges as well. We need to focus on adequate sources of insurance or estate planning so that they don't act as generational setbacks for further financial generations as well.
Now, what global event right now are we underestimating that could catch the Philippines off guard?
I think right now we are currently looking at events such as recent tariff developments and slowdown in other countries such as the Chinese economy. We need to look at these countries as major drivers of global demand, which could affect our outflows as well, and which could also spill over into trade disruptions. So we could be exposed to external shocks and global capital flows as well.
Right now, are we seeing local and even foreign investors in a wait-and-see mode, or are we seeing an influx of investments right now?
I think most of the investors that we are seeing right now are focusing on short-term investments or stock that can generate high value in a short amount of time, as there are certain macroeconomic uncertainties and geopolitical tensions that we are currently facing right now.
Today, Alexandra, what do banks and brokers really know that ordinary people, ordinary investors don't know? And how can we think more like them?
I I think if we consider the mindset of banks and brokers, they have certain access to macroeconomic models and fund flows and also insider sentiments. These factors can allow them to anticipate shifts before the public reacts. They prepare for both upturns and downturns through factors such as diversification and risk hedging, as well as clear exit strategies as well. So by using data to guide decisions, they're able to prepare ahead of time.
What do you think can the government or even the local businesses here do to entice more local investors and also entice more foreign direct investments here in our country?
I think it would be best really appeal to people's sense of logic as well in terms of the main economic value in terms of investments, both in terms of short term and long term as well, in the effects on them as individuals, but also in terms of generational, how this can further provide generational wealth and in terms of being more financially aware and literate in order to better prepare for macroeconomic shocks.
Do you think now the younger generation, like the Gen Z, are they more financially aware? Or is there a lot more spending than investing?
I think there are quite a few that are more financially aware and focuses more on digital platforms such as digital banks and stock investments and also cryptocurrency as well.
As an analyst, what are you looking at in terms of what's happening right now locally in our economy and also what's happening outside with regards to tariffs, with regards to a lot of the issues that's happening around the world? What are you looking right now as an analyst to see where we are at in terms of our economy?
I think right now we are looking at several factors such as current inflation rates and unemployment rates as well. Also in terms of certain statistics such as how our industrial sector is doing and how our infrastructure is doing. We're also looking at the capital inflows and outflows, as well as discretionary spending and household debt, so that we can better understand the current macroeconomic position of the Philippines and how we are reacting to these, how we are reacting to these changes, both in previous months and upcoming months as well. If there are signs that it could be getting better or if there are signs that we need to be more cautious.
Now, Alexandra, in today's current economic climate, is this a good time to invest in a business or is cash still king while we wait for clarity?
I think it would ultimately depend on the nature of the business. For instance, necessity-driven ventures or digital-first ventures such as energy-focused, consumer-focused, or property-focused ventures, it would be an ideal time to grow. But if you're focused more on capital-heavy infrastructures, the tighter credit aspect might be a bit more of a challenge. Right now, it's supposed to focus more on resilient sectors and necessities as well so that we can further act with caution.
Now, Alexandra, in the digital space, are we looking at AI as a big part of what businesses are looking, what investors are looking today?
I think it could act as a big part. As right now, what most investors are really looking at are the main fundamentals and nature of the company as well, in order to see if they're forward focused, if they're able to currently have a consistent dividend payout, if they're able to consistently have a good net income and revenue generation as well.
Now today, what's one money move that feels safe but is actually dangerous in this current economy?
I think if you keep all your savings in a regular bank account, it might seem safe, but in terms of an inflationary environment, it may encounter challenges. Let's say inflation runs at 5%, but your money earns 1%, you would be losing value every year. And the compounding effect of that would be quite significant. So what is more important is moving to diversification or higher yield instruments in order to further preserve your value.
Now, as an analyst and also looking at the capital markets, what would be a good mix in terms of putting money in savings and putting some away in investments? What would be a good mix today?
In terms of investments, a significant portion really should be put towards investments. However, you should be prepared that the amount of money that you invest, you may also lose due to geopolitical tensions or macroeconomic shocks. So that's why being more aware of the company's earnings and fundamental strategy is important as well, so that you have a significant portion in savings and in banks, but you also have a significant portion in index names in order to further generate value for your portfolio.
And for the benefit of our viewers, what are 3 money lessons you live by that every Filipino should hear today?
I think the first is saving and investing in yourself before you spend, not after. And second, I think it's knowing more about the value that something has and how it generates this value, not just how it appears to be valuable. And for third, I think investments are really important, and not just buying your future self's comfort, but also helping you focus on building cash flowing assets as early as possible, which would really help secure a more financial future rather.
That's very good advice, Alexandra. And now let's go to our rapid fire questions. Alexandra, you don't have to explain, you just answer yes or no. Let's start with this. Do you think money can buy you a little extra confidence? Yes or no?
Yes.
Have you ever made a spontaneous investment just for the fun of it?
Yes.
If your wallet could talk, would it be laughing or sighing?
Sorry.
Is taking financial risk more exciting than playing it safe?
No.
Okay. And finally, complete the sentence. Money is the root of all.
Of all discussion.
Again, Alexandra? Money is the root of all.
Money is the root of all discussion.
Okay, thank you, Alexandra, for all the insights about our economy and how we can invest our money wisely. Thank you for your valuable insights. You give us plenty to think about when it comes to making smarter and more confident money moves. Thank you, Alexandra. Okay, and if you're building a business in uncertain times, it's not just about timing. It's about team, systems, and leadership. Legendary American automobile executive Lee Iacocca says, gave a foolproof formula. Start with good people, lay out the rules, communicate, motivate, reward. Do that right, and you can't miss. In other words, to survive a storm, you need to prepare a strong crew. And that's it for today's edition of Follow the Money. I'm Robert Tan. Thanks for watching. Keep it here on BNC, the Bilyonaryo News Channel.